There's no opportunity to profit because you're not trading against someone who's less skilled. You're trading against competition that's increasingly skilled. And they found that this skill increase is mainly driven by fund managers who are better educated. And actually, this isn't a finding, this is their suggestion. The excess skill, the additional skill is coming from fund managers who are better educated and better acquainted with new technology. So that kind of backs up what I was saying a second ago, that if you're a day trader and you have a good interface and quick access to information, so do the fund managers. And realistically, they probably have better access to information than you do. So I think the argument that access to information makes day trading easier is actually the opposite. I think it makes day trading harder because everybody has access to more information. And then the trading cost one, this one's fascinating. This is actually a fine that the SEC just issued. I think yesterday is when I first saw it. So they just fined Robinhood $65 million for misleading their customers on the concept of no trading fees from 2015 to 2018. They found that in most cases, Robinhood customers would have been better off actually paying trading commissions at a different brokerage because of the way that Robinhood was executing the trades. So that's interesting because if you're a Robinhood customer and it feels like you're placing free trades, at least from 2015 to 2018, and maybe they changed something, I'm not sure. But the way that they were executing the orders resulted in costs that were in many cases equivalent to, and in a lot of cases, like they found for larger orders of over 2,000 shares, their customers were effectively paying $23 per order. So more than you would have been paying if you just been paying a commission. So this idea that trading costs have gone down, I don't know how true that is. I think they've been repackaged. But the idea that you can look at the previous studies and say, well, those are no longer relevant because trading costs are zero, I don't think that's a valid argument.
What exactly was Robinhood doing to somewhat mask those costs?
So I'm not a Robinhood expert, but they route the orders through high-frequency trading firms, like they sell the order flow to other firms. And the way that the trades end up getting executed, in the case of Robinhood, is not as good as it would have been with another brokerage. So something called price improvement. And what the SEC fine was based on is that the price improvement on the trades through Robinhood is not as good as it would have been through a different platform, through another discount broker that was maybe charging a commission to execute the trades. So it's basically the way that the orders are being fulfilled. So you're not paying a commission, but you're not getting execution that is based on this fine from the SEC that is as good as it would have been dealing with a different discount broker.
Do you think we're seeing similar types of things happen with other brokerages now that they've gone to zero trading commissions?
It's tough to say, but I think that there's a cost to doing business, I guess, generally. And when something is free, or looks free, or sold as free, in a lot of cases, it isn't free. And it's kind of what I mentioned a second ago, that in a lot of cases, when we think costs have gone away, when we're being told something is free, the cost of it in many cases just been repackaged. Or as, I can't remember who I heard say this, but if you're not paying for the service, then you are the product, which is what we hear about social media and stuff like that. But the same thing can be said about Robinhood, where you're not paying for the service, you're getting this free order execution, but they're selling your order execution, and that's how they're making their profits, therefore you are the product. So I don't know what you think about is that day traders might not have the type of risk-averse preferences that a standard rational economic model would predict. So they actually prefer investments with lottery-like chaos. So it's called a skewed outcome. Small chance at a really good outcome with a large chance of a somewhat bad outcome. So day traders, they must have that preference in order to day trade because that's the kind of outcome that you get with day trading. You get a skewed outcome, a lottery-like outcome. Now, interestingly, in this paper, the authors actually suggest that if that's the outcome day traders are looking for, instead of buying and selling assets, they could just buy individual stocks and hold them because you get a really highly skewed outcome by holding an individual stock, and you save on all the transaction costs, which are going to come up as we continue to talk through this. Another big one, and I think when you look at places like Wall Street Bets, which is always fun to read, I think this is probably the one that is quite relevant, where day traders are overconfident, and they have to be. And I think a lot of that comes from, and this is from this paper, their suggestion, but it comes from positive stories of day traders circulating in non-representative proportions. I mean, it's a fancy way of saying you only hear about the good outcomes, which isn't always true on Wall Street Bets. You see a lot of the bad outcomes too, but I think people are drawn to the good outcomes. Like I remember reading about someone going from $460 to $1 million using Tesla call options. And that's thrilling. Like I'd love to do that too, but we'll talk more about the data around day trading in a sec. And I think the last one, which is also relevant to things like Wall Street Bets and other trading communities, is that day traders may trade for non-financial reasons. So there's an element of entertainment, there's an element of gambling, there's an element of impressing other people, which again, with all the loss and gain posts we see on Wall Street Bets, I think seems pretty realistic as a motivation. And in that case, it's interesting because even if people are losing money, and again, this makes me think of Wall Street Bets, even if you are losing money trading, it's kind of like the cost of admission to doing an activity that you enjoy. So to summarize those points, I think day traders have non-standard risk preferences. They prefer those skewed outcomes. They're probably overconfident, and that probably happens because of the way that information circulates. And there's a good chance they're trading for non-financial reasons altogether.
We so often only see the positive trades or when people are doing well. I have a friend who dips his toe in day trading and he only sends me the trades that he does really well on. And I'm like, yes, that's an amazing trade. Like, bravo. I clap my hands for him. I said, but you haven't sent me one in probably 10 days. What happened in those other 10 days? I know you've been trading. So what happened? Why didn't you send me any of those? So clearly he's only sharing the ones that are positive. And you see this all over the web or social media everywhere. That's all you hear about is the good ones. You don't necessarily hear about all the bad ones.
And I think where it's even worse, and this definitely exacerbates the problem and draws people into trying to day trade, is that all these people selling online courses. Like if I ever go and look at one of my old YouTube videos, before I can watch it, I always have to watch the ad, and the ad is almost always someone selling a course on day trading, talking about how much money they're making and all this kind of stuff. And in a lot of cases, those are just going to be outright lies, but people don't necessarily know that, and so you get drawn into this concept. So I think even if it's cases where people aren't showing their actual good outcomes, there's a lot of cases where people are just saying, look at the outcome that you can get if you buy my course.
And it's like, if you just take a step back and think rationally, right, logically, you say, okay, well, if I did this well on a trade, or if that person did that well on a trade, and they can do that consistently, they could start with $1,000, and then I forget the exact statistic, but within a couple of years, they'll have like $84 trillion or something ridiculous. It's like, clearly this is not something sustainable. It's, you got to temper back those expectations.
Yeah, I know you want to talk about Renaissance technologies later too, and they're this perfect example of that, where they've actually closed their fund into investors for many years, and it's a secret. Nobody really knows what they're doing. Like they're the sort of ultimate short-term trading success story, but they won't take your money. They don't even keep their own profits in the fund. They distribute them to the investors every year, and nobody knows what they're doing. So the idea that somebody who's as good as Renaissance technologies or even close to that level is going to tell you what they're doing is a bit ridiculous.
If somebody was making so much money from day trading, they wouldn't need to sell the course, right? Ultimately, I think if you were to look at somebody's financial statement, I bet they make more money from selling the courses than they are actually day trading. And I think that for me is a misalignment of incentives and not necessarily the right person I want to be learning from.
Absolutely. Sometimes I'll click on the Twitter ads or the YouTube ads to see what people are pitching. In a lot of cases, they actually address that. They'll say, if I'm so successful, why am I sharing this with you? And then they always have some ridiculous reason. But you think about it, it would be the logical thought process for a lot of people to say what you just said. But these people selling the courses, they're addressing that in the pitch. Well, here's why I'm telling you this, even though I don't need any more money. Like, it's hard for people to see that without all the data and know that it's ridiculous.
And I'm speaking from this a little bit from experience, because that's how I actually first got started in investing. Was I saw a guru who was supposedly teaching a course that was going to teach you how to get rich quick, day trading penny stocks. And I was 14, 15 at the time. I didn't know anything about investing. Of course, that sucked me in. Thank God I quickly realized, I was like, all right, this isn't really possible. And I didn't spend any money. I didn't lose any money, thankfully. And I found Warren Buffett, and the rest is history from there. But I'm speaking about this because it happened to me and I still see it all over the place nowadays. Let's take a quick break to hear from today's show sponsor. Typically, managing your money has been complicated, time-consuming, and costly. But now you can do better with M1. M1 is the finance super.
Yeah, give him some encouragement for having that courage to realize that maybe his portfolio needs some improvements.
Well, absolutely. So I will talk about a company that I bought and sold because basically my whole idea around the company was wrong. And that company was GameStop. And so this was pre, a couple weeks ago. Now that we're recording this episode, this was actually a few years ago.
Many thanks, as I'm humbled already by everyone's support. Appreciate you.
I'm just
Interested
chilling.
in stock investing, M1 Finance is offering a special limited time promotion. If you sign up with my M1 Finance referral link, which is also in the video description, and make a $100 deposit, both you and I will receive $30.
We'll bring you here, click claim your free stocks now. You have to add $100 to even get the stocks in general. After you add the 100, you can withdraw the 100, you can claim your 2 free stocks, which is usually $20 to $50. You can get $18.50, but most likely you won't. You will get free money. If you want free money, click that, add $100 to your Webull account. Maybe use the Webull platform as your main trading platform.
Totally free. You can just stock like Microsoft, Visa, Johnson & Johnson. All you gotta do is sign up for my link down in the description, sign up for Robinhood. All you gotta do is fill out some information about yourself and link your bank account, and literally that's it. That's all you gotta do.
Yeah, I'm actually a nice person.
Line up that like button, or smash the like button. Regardless of which metaphor you prefer, this small action really helps me grow the channel, and I appreciate it.
Hey, wait. Have a great day.